Here's something nobody told you when you turned 65. There are bills sitting in your mailbox right now. Bills you've been paying faithfully every single month that you may not legally owe anymore. And the frustrating part, the government isn't going to call you. The tax office isn't sending a letter. Nobody is going to knock on your door and say, hey, you're exempt from this now. You have to know to ask. And most people never do. Today we're going through 5 specific bills that millions of American seniors are paying when they don't have to. We're talking property taxes, certain Medicare premiums, federal income taxes on Social Security, utility costs, and phone and internet bills. Every single one of these has a legal exemption or relief program built in, already funded, already waiting, and most people over 65 are leaving this money on the table every year without realizing it. Before we get into it, if this kind of information is useful to you, hit subscribe and turn on notifications. We put out videos like this every week, and this stuff changes. Deadlines shift, income thresholds adjust, programs get expanded. You want to be here when that happens. Now let's get into the first bill, because this one alone could be worth thousands of dollars. Bill number 1, your property tax. This is the big one. If you own your home and you're 65 or older, there is almost certainly a property tax exemption available to you right now that you are not claiming. Almost every state in the country has one. Some counties have their own on top of the state program. And the amounts we're talking about are not small. We're talking anywhere from $1,200 a year on the low end to over $6,000 annually, depending on where you live. Here's how it typically works. Once you hit 65, you become eligible to apply for what's called a senior homestead exemption. Some states call it a senior freeze. Others call it a circuit breaker program. The name changes, but the idea is the same. Your local government acknowledges that people on fixed incomes shouldn't be getting priced out of homes they've owned for decades, so they reduce or cap your property tax bill. Florida gives qualifying seniors up to $50,000 off their assessed home value. Texas freezes your school district taxes the year you turn 65, which means they cannot go up even if your home value increases. California has a program that limits how much your assessed value can rise. New York offers exemptions that can cut your school taxes significantly, and that's just a handful of states. Almost every state has something. The problem is the application process. This doesn't happen automatically. You have to apply, usually through your county assessor's office or tax commissioner's office. Most counties have a deadline, often around April or May for the following tax year. If you miss it, you wait another full year. That's another year of overpaying. Call your county assessor's office this week. Just call and ask, what senior property tax exemptions do you have? What's the income limit? And what's the deadline to apply? That one phone call could save you thousands of dollars every single year you remain in that home. If you found that useful, do me a quick favor and hit the like button. It helps other seniors find this video, and honestly, this is information that needs to get out there. Now let's talk about the second bill. Bill number 2, Medicare Part B premiums. Most people treat their Medicare Part B premium like a fixed cost. It comes out of your Social Security check automatically, you accept it, and you move on. But there's a program called the Medicare Savings Program, and if your income is below a certain level, this program pays your Part B premium for you, completely, gone, zero. In 2025, if your monthly income is below around $1,500 as a single person, or around $2,000 as a married couple, you likely qualify for what's called the Qualified Medicare Beneficiary Program. That's the QMB. This program doesn't just pay your Part B premium, it also covers your Part A premium if you have one, your deductibles, and your co-payments. It's one of the most comprehensive assistance programs available and one of the least claimed. There's also the Specified Low-Income Medicare Beneficiary Program, SLMB, which covers just the Part B premium for people who earn slightly more. And the Qualifying Individual Program above that covers Part B premiums for people at a somewhat higher income level. Taken together, these programs currently help millions of seniors, but could help tens of millions more who simply don't know they qualify or haven't gone through the application. Here's what makes this particularly frustrating. The Part B premium in 2025 is over $170 a month. That's more than $2,000 a year coming out of your Social Security benefits. If you qualify for the Medicare Savings Program, that money stays in your check every month, every year. To apply, contact your state Medicaid office. You can also call 1-800-MEDICARE, which is 1-800-633-4639 4227 and ask specifically about Medicare savings programs in your state. They will walk you through eligibility and the application process. Don't go anywhere because the next one is about your actual Social Security check and a tax that most people don't realize they can legally reduce or eliminate. Keep watching. Bill number 3. Federal income tax on Social Security benefits. A lot of seniors are genuinely shocked when they find out their Social Security benefits can be taxed. And then they're even more shocked to learn that with a little planning, many of them don't have to pay that tax at all, or can drastically reduce it. Here's how this works. The IRS determines whether your Social Security is taxable based on something called your combined income. Combined income is your adjusted gross income plus any non-taxable interest plus half of your Social Security benefits added together. If that number stays below $25,000 for a single filer or $32,000 for a married couple filing jointly, your Social Security benefits are not taxable at the federal level. None of them. If your combined income falls between $25,000 and $34,000 as a single filer, up to 50% of your benefits may be taxable. Above $34,000, up to 85% can be taxed. For married couples, the thresholds are $32,000 and $44,000. Now here's where it gets interesting. There are legitimate strategies people use to keep their combined income below those thresholds. One of the most common involves how you sequence withdrawals from different accounts. Withdrawals from a Roth IRA, for example, don't count toward your combined income calculation because that money was already taxed before it went in. Pulling from Roth accounts instead of traditional IRAs can sometimes keep your combined income low enough to reduce or eliminate Social Security taxation entirely. Beyond that, there's something many seniors don't know about: the additional standard deduction available to people 65 and older. On top of the regular standard deduction, you get an extra amount just for being 65. In 2025, that's an additional $1,950 for a single filer and $1,550 per person for married couples filing jointly. If both spouses are 65 or older, that's an extra $3,100 on top of the already substantial standard deduction. If you're not working with a tax professional who specializes in retirement income, this is a good time to consider it. The tax savings available to seniors through proper planning are significant, and they're completely legal, built right into the tax code specifically for you. Go ahead and share this video with someone you know who's retired. Honestly, this is the kind of information that gets passed around at family dinners, and it should. People are losing real money by not knowing this. Okay, number 4. Bill. Number 4. Your utility bills: electricity, gas, and water. You might be surprised to learn that there are federal and state programs specifically designed to help seniors pay lower utility bills, not after-the-fact rebates, not complicated applications for next year, programs that actively reduce what you owe every single month. The biggest one at the federal level is called LIHEAP, the Low-Income Home Energy Assistance Program. This program provides direct assistance with heating and cooling costs for qualifying households. Eligibility is based on income and household size, and the income limits are higher than most people expect. A household with 2 people can often qualify with an annual income up to around $36,000, or sometimes higher depending on the state. And in some states, seniors receive priority processing. LIHEAP doesn't just help in winter. Many states now offer cooling assistance for summer months as well, recognizing that air conditioning during heat waves is not a luxury for elderly people. It's a health necessity. Beyond LIHEAP, most major utility companies have their own senior discount programs. They don't advertise them aggressively because they'd rather you pay full price. But if you call your electric company, your gas company, or your water utility and ask specifically what senior discount programs or fixed income programs they offer, you will often find options that reduce your monthly bill by 10 to 30%. Some states go further. California has a program called CARE, the California Alternate Rates for Energy, that reduces electric and gas bills by about 30% for qualifying households. New York, Illinois, Pennsylvania, and many other states have similar utility assistance programs specific to their residents. To find what's available in your area, call 1-800-677-1116, which is the Elder Care Locator, a federally funded service that connects seniors with local programs. You can also visit benefits.gov and search for energy assistance. Both resources are free, official, and staffed by people whose job is literally to help you find these programs. Stay with me because the last bill on this list is one that almost nobody talks about, but it affects millions of seniors every single month. You might even be paying it right now. Bill number 5, your phone and internet bill. There is a federal program called the Affordable Connectivity Program, or if that ended in your area, its predecessor, the Lifeline program, that helps qualifying low-income households, including seniors, pay for phone and internet service. Lifeline, which is still active, provides up to $9.25 per month toward a phone or internet plan. On tribal lands, that benefit goes up to $34.25 monthly. $9 might not sound life-changing, but for many seniors on fixed incomes, that's meaningful. And when you stack it with a senior discount directly from the carrier, the savings compound. More importantly, for people who want to maintain connectivity, whether for telehealth appointments, staying in touch with family, managing Medicare and Social Security accounts online, or just staying mentally engaged, there are carriers that offer heavily discounted plans specifically for Lifeline-eligible customers. Some plans come in under $10 a month for people who qualify. Eligibility for Lifeline is based on income or participation in other federal assistance programs. If you're already enrolled in Medicaid, receiving Supplemental Security Income, SSI, getting SNAP benefits, or participating in certain other federal programs, you automatically qualify. You don't have to calculate your income or prove anything additional. Program participation alone qualifies you. To apply, go to lifelinesupport.org, that's the official FCC-administered site, or call your phone carrier directly and ask about Lifeline enrollment. It takes about 15 minutes, and the monthly savings continue automatically once you're enrolled. Now let's bring all of this together, because the real point here isn't just 5 individual bills. The real point is a pattern. Why you're paying bills you don't have to pay. Every single program we talked about today has one thing in common. None of them come to you. The county doesn't call and offer you the property tax exemption. Medicare doesn't automatically enroll you in the savings program when your income qualifies. The IRS doesn't send you a letter explaining how to structure your withdrawals to reduce taxation on your Social Security. The utility company doesn't mention their senior discount unless you ask. The phone company isn't volunteering that you qualify for Lifeline. These programs exist because Congress or state legislatures decided that people on fixed incomes deserve relief. They funded these programs with real money. But the system assumes you'll figure it out yourself, and most people don't. They just keep paying. The seniors who benefit from these exemptions are not unusually resourceful or well-connected. They're people who happened to hear about a program from a neighbor, or watched a video like this one, or had a family member dig around on their behalf. That's it. That's the entire difference between paying and not paying. So here's what I want you to do this week. Not next month. This week. Pick 2 of these 5 items and make 1 phone call each. Just 2 calls. Call your county assessor's office and ask about senior property tax exemptions. Call your utility company and ask what programs they have for seniors or fixed income customers. 2 calls, maybe 20 minutes total, and the information you get could save you thousands of dollars every year going forward. If you're dealing with Medicare premiums, call 1-800-633-4227 and ask about Medicare savings programs. If you want to check on phone and internet, go to lifelinesupport.org. If you want to understand your Social Security taxation situation, sit down with a tax professional who works specifically with retirees. The conversation will pay for itself many times over. And if this video helped you, subscribe to this channel before you go. We cover Social Security, Medicare, tax strategies, and government assistance programs that affect your retirement every single week. New information comes out constantly. Income thresholds change, programs get modified, deadlines shift, and you want to know about it before it affects your money, not after. Leave a comment below telling me which of these 5 bills you plan to address first. I read every comment, and sometimes the questions in the comments become the next video. Your question might be exactly what someone else needs to hear answered. Share this with one person in your life who is retired or approaching retirement. Not a mass share, just one person you're thinking of right now who would genuinely benefit from knowing this. That one share might be the thing that saves them thousands of dollars this year. You've worked your whole life building what you have. These exemptions and programs exist specifically so that the system doesn't quietly take it back from you piece by piece. But they only work if you use them. Now you know they exist. Go use them.